the market's changing. Every quarter, things are changing. One time rents are going up, one time rents are going down, then the interest reserves are going up, and whatever. Things are always changing based on what's going on right now. And one of the things that we're seeing currently is that rents are actually, in many markets, not all, but they're projected to be flat or maybe mildly down. And the question is, in those markets, or even when the interest rates go up, probably people say, oh, this is bad. Interest rates going up is bad. Rents not going up is bad. And how do we deal with that, right? In an environment where we're trying to buy and scale, how do we just wait for the market to improve, or do we do something else? How do we deal with this, whatever situation there is? In this case, it might be rents that are flat.
Yeah, so I mean, listen, everybody's anticipating this being a temporary problem. But what we're seeing right now in a lot of cases is that the rents that you could have got, in a couple of years ago, they're less than they were then. So people are focusing a lot more. We talk about it in the podcast on renewals. So you're having negative lease trade outs happen. And so the question is, how do you forecast that? And so what we're doing is we're forecasting whatever the forced appreciation rent bumps are. So like you renovate a unit and you're supposed to get higher rents for that unit. You just have to start with a lower baseline on that. So let's say, for example, your rent is $1,400 on a current unit. That tenant moves out, but you can only get $1,350 now. Okay. Now, if you have a $100 rent bump, you have to price that now at $1,450. So $1,350 plus the $100. And that is, instead of going 1,400 plus 100, you're going back 50 and up 100. Right. So it's a little bit of a different dynamic, and that's what has to go into the underwriting now, so that we're just making sure that we're covering our bases going forward. And then you have to look at CoStar data to really understand maybe where they're projecting rents to go, so you can have that organic rent growth tick back in after a year, a couple years, or whatever they're saying it could be at that point. Because again, there's still a lot of demand for renters. It's just that it's a weird time right now, and there's still the oversupply that hopefully should clear up in the next year. We're still in the middle of that oversupply. Deliveries are high, and they're still coming in. And starting in 2026 is when you're going to ideally, and per the data, see some relief from that. So we're not there yet. So you just have to make sure you're covering that in your underwriting. And if you are, the good news is that you're typically able to get a price reduction on whatever you're purchasing, as long as the market understands that going into whatever you're purchasing. So it's a good time, again, to get into something as long as it supports your underwriting.
So the lesson here is you're constantly adjusting your underwriting, and the lesson for if you're passively investing is to invest with an operator who you can trust and rely on to make the right decision, right? There's a lot of operators out there who are still putting 3 to 5% rent growth in there, but we're just simply not seeing it. And we know this because we're constantly looking at deals and we own our own property. So we're like, this is not going to work, guys. So we can't put these kind of rent bumps in there. And that, of course, means that we can't pay as much, which means that when we actually end up doing a deal, it's conservative assumptions. So invest with an operator who knows what the market's going on and has the discipline to underwrite conservatively. And if you are a passive investor, we'd love to earn your trust. Our investing company is called Nighthawk Equity. So if you want to learn more about us there, go to nighthawkequity.com and find out more about us. We have a bunch of resources that educate you on investing passively in real estate, but we also allow you to book a call with us and have a conversation with us. We'd love to have that. And if you're an active investor, if you're the entrepreneur and the syndicator, then the best thing you can do right now is to work with an experienced mentor or an experienced team of people who's familiar with what's going on right now. And rent growth, or the lack thereof, is one of those things. But it could be interest rates, or it could be it could be interest reserves. It could be a number of things that are constantly changing. Make sure that you're working with someone who knows what's going on. So if you want to find out more about that, then check us out. We're at themichaelblank.com/mentor. If you want to talk to us about potentially working with us to get into this market. It's very difficult or impossible to try to time the market. In fact, it's stupid because you can't. The market is never perfect. If we try to time the market, no one would be buying anything, right? Since the interest rates gone up, because clearly interest rates are higher. Well, it's not really a good plan, in my opinion, and Garrett's probably also, to simply sit on the sideline, but instead you adapt your underwriting and your tactics on how you actually get deals done. So check us out on both of those counts if you want to move forward with multifamily. We'd love to help you either in the active or the passive front. And so this is a good point in not trying to time the market, but adapting your underwriting. So with that, I want to get in a story with Axel Ragnarsson because he's really built an impressive portfolio, but by his own admission, he kind of scaled kind of slowly. And that was because he was doing a bunch of single family and small duplex kind of things, and he was self-funding, and he didn't really like the idea of, well, he didn't know about raising capital or joint venturing, and then when he did, he didn't really like the idea, and he talks about that because a lot of people have hangups around those things. And it's fine. He had, up to 70 units in that way, but it really held him back. And we kind of talked about why that wasn't how he broke out of that to kind of get to 500 plus units. And we challenged him a little bit about growing beyond that because there are different stages of growth. And the one that he's in right now, you'll find out why in the show, why he kind of feels a little stuck around 500 units. Not a bad place to get stuck, obviously, but stuck nonetheless. So we'll talk through that as well. Let's get in the show with Axel Ragnarsson.